What if I'm gonna tell you that this is the trading pattern that every single trader is trading, and this is the best pattern of all time? This is a trading pattern that you need to be looking for. Now buckle up, fellas, this is gonna be juicy. There is one price action, one simple indicator, one candle that actually matters, and one move that could be useful for your trading strategy, and stop guessing where the price could go next. Increase your probabilities, my friends, to win the trade. Increase your win rate. Most of you overcomplicate everything. You slap 15 indicators on your screen, chase noise, and wonder why the hell you keep losing. The market isn't your friend. It doesn't care about your feelings or your hopes. What does matter, actually, it is a structure. Pure, clean, undeniable market structure. Today, we're talking about the break of structure, the move that exposes whether the trend is real or you're about to get wrecked. Again, in my experience, these type of setups has the most logic behind the charts by understanding what is actually happens with the price down here. For those who know me as a swing trader, of course, I'm always looking for this type of confirmation before I'm entering a trade. This is the pattern, a price action. I'm like a hawk trying to hunt every single freaking time. Right now, let's jump straight into this trading strategies masterclass. Let's start talking about this illustration first, and then we're gonna jump straight into the charts. But before I do that, I want you to subscribe to the channel, give to the video a thumbs up. If you want to see more educational content on trading, of course, it costs you absolutely nothing. So let's begin. And right now, I want to start talking from the left to the right. Left side identifies a bearish momentum when the price is going to the downside, and this is the zone when the price starts shifting from a bearish into the bullish, and we're printing a bullish momentum. So what happened in between those three phases, and what is the logic behind every single move? All I want you to understand, for those who don't know how the price works in trading, price works in all of those waves. At the top, the same waves are we seeing here. At the top, we have a shit ton of resistance. This is the zone where sellers agrees that we need to sell at this price, or a buyers that agrees to this price. So this is like increase a selling pressure in the market. And here at the bottom, we have a buy power, where the demand of the people who want to buy more and they agrees to buy at this price, and the price is moving in all of those waves, ups and downs, ups and downs. And your freaking job, my job, all of your favorite influencers' job is to be able to identify, like a hawk, like a true professional, those highs and lows. By doing that, you will increase your win rate by understanding what is actually happening in the market and what type of market structure, what type of pattern we are forming, and increasing your win rate after you identifying a perfect pattern, an A+ pattern, jumping into a trade. That's what I mean by increasing your win rate, by understanding clear as day what is the price action, what is the pattern, and what is the logic behind this. So let's just imagine that we're gonna start from the left to the right. This is the illustration when we found a high and we saw a nice rejection. At some point, as you already know, we already discussed that at some point we need to find that low. We need to find a support, and we need to see some kind of rebound from the bottom here. After seeing some kind of rebound, a rally to the upside, and we're getting rejected. At some point, fellas, we're always gonna get rejected. It doesn't matter if you're trading on the higher time frame, on the lower time frame, on the 1-4 daily time frame. Doesn't matter. There's no such thing as, you like to guys call in the crypto market, God candles. I mean, every single time, at some point, we're still gonna get rejected. So there's no brainer for me. I'm waiting for some kind of rejections. All right, I found a rejection. We printed a lower high because this high is lower than this one. Let's just imagine, based on this illustration, another drawdown. We found a support once again, but this support is lower than the previous one. What that tells me, that this is the break of structure. And you saw those type of drawings on your favorite influencers charts all over the social media probably, and right now you're wondering what the hell is this. So the break of structure is like an indicator for you to understand that we're breaking the structure and we keep printing that bearish momentum. The price just keeps inside this bearish momentum. We're printing lower lows, lower lows, lower lows over and over and over again with the lower highs. We're in this freaking bearish momentum. And there's like no indicator for us to tell that when we're going to start bouncing back up like crazy, not like sideways to the downside, but when we're going to start shifting from a bearish into the bullish, where's the bottom? The majority of people likes to ask in the crypto market, where the hell is the bottom? So my job as a trader and using that educated guess to identify where could be that bottom for me in order to jump into a buy long position to the long swing for the rest of the month, as an example, because I'm a swing trader, so I'm using a higher time frame. All right, once again, we found a buy power rally to the upside. At some point, once again, we got rejected. So that identifies that there's a shit ton of supply here and we still keep printing lower highs. Another drawdown, we found a low that is like lower than the previous low. The support is even lower than this one. Once again, what does that mean? Huh, fellas? Break of freaking structure. Once again, another one, lower low, lower high. We found these resistance at the top here, drawdown, another break of structure. So what needs to happen in the market for me to be able to identify that we're changing the whole game? We're changing the whole game. Enough is enough of this downtrend. I want to start buying my favorite coin, my favorite, I don't know, S&P 500, my favorite Forex pair. It doesn't freaking matter. What needs to happen in the charts that I need to change my mind and start thinking by being two-way bearish? I want to be bull once again because I'm bullish on the asset. For example, on Ethereum, for those who are following me, I'm bullish on Ethereum, I'm bullish on the Bitcoin. I need to wait to see where the bottom is. After printing this low, a rally to the upside, nothing special happened here. We found another rejection here. So let's just imagine this is some kind of supply. All right. Another rejection. Boom. Into another low. But this is the freaking zone where the magic happens. This is where the magic happens. And this is the first place when I'm trying to project or I'm just trying to anticipate that we actually can, fellas, to print a higher high and to change the whole game. And this is the zone. If we're printing a higher high because we're breaking through this lower high and we printed a higher high, this is the freaking zone that happens change of character thing. Change of character means that we're changing the whole game. Of course, I'm using my own terms sometimes, so some people may not understand me, but I have a GC, the game changer, or I can use the simple break of structure. Once again, doesn't freaking matter. I can see like with my naked eye right now after years of experience that we're breaking the whole structure from a bearish into the bullish. But for you, for those who don't understand how the price action works, and we found a low, a higher high, this is the zone when everything's changed. So right now, when I'm in the phase, let's just see in the third phase, I'm waiting for some kind of rejection for me to build a buy long position. After seeing a drawdown, right now I'm trying to anticipate by using, let's just say, this is the zone where all of your traders are sitting at. I'm trying to anticipate, are we gonna get rejected? I mean, are we gonna get support? Where's my support box? Are we going to get some respect from the fair value gap? Because some of you traders are trading based on the fair value gaps. Are we going to find a demand? Huh? Are we going to get respect from identifying swing lows and swing highs from the Fibonacci golden zone, from the Fibonacci premium zone? Where's my entry confirmation? So this is the zone where the magic happens. All of your freaking favorite traders are sitting at approximately here. Even traders, of course, me as well, I like trading trend lines. For those who are trading trend lines, also they're waiting for some kind of breakout and a retest at approximately this trend line. Of course, this illustration, I cannot be that accurate, but even trend line traders, pattern traders, SM smart money concept traders, fair value gap, support, resistance, supply, demand, every freaking one of you are sitting at approximately here at this phase. That was our first phase. A second one, when we're trying to identify, is this not some kind of manipulated move, and we're truly printing a higher low. And after that, in the third phase, when we printed a higher high and we now have a probability to print that bullish momentum and keep riding that bullish wave after we're buying or jumping into a long, enjoying our profits when price just starts increasing. All right. So what else? There's three type of entry points inside here. Let's just imagine that we bounce back up after printing this lower low, and then when we found a higher low, when we found a demand, because maybe there was some kind of impulsive movement with the following impulsive candle, we printed and we accumulated a demand zone here. So let's just imagine we bounce back up with the wick or with the candle's body from approximately here, because we were able to identify on a higher time frame, like on a 4-hour time frame or on a daily time frame, that this is a very strong key level support, where we see the multiple confirmations. The more touch points we have, the more confirmation we have. So you connected all of those touch points at the higher time frame, and on the lower time frame, we're bouncing back up from here. All right. Some of the traders, they know their trading environment. It doesn't matter if they're trading gold, Ethereum, Bitcoin, like NASDAQ, futures market, Forex, Euro, USD, GBP, gold, silver, it doesn't matter. They understand their ticker, that one ticker, they understand their environment because, for example, they're experienced ones and they've been following for that specific ticker for that specific asset class for 7-10 years. They have insane amount of experience. And they're entering because they're trading even those key levels. So they're entering that key level when we're seeing it bounce back up. Some of the traders, like, let's just imagine the first phase, I'm just going to call those traders like pros, or absolutely for those who understand their environment, because they keep tracking. For example, me, I keep tracking Ethereum price since 2016. So I understand and I can anticipate what Ethereum could do when we touch certain levels. The second part of the traders, they're waiting for some kind of more confirmation. They need more confirmation. This is not enough for them. Maybe it's some kind of shake off and we're going to go even lower. It is not enough. They're trying to see if we're able to print a higher low. And by printing a higher low, of course, they're zooming in inside here because we're on the 1-hour time frame. So maybe they're zooming on a 15-minute time frame, on a 5-minute time frame. They're seeing if this type of movement is happening on the lower time frame. So they're trying to enter a trade at this point, because it increases right now probability to be right about this move. Because if we're printing a higher low, now there's a chance for us, even a small chance, it doesn't matter for them, to break the whole structure. Because they want to jump into the trade a little bit more early, not like all of those retail traders jumping after a breakout from some kind of key levels, or let's just say from the buy trading patterns or whatever. This is the retail trader thing for them, not for you, but for them. They want to jump into a trade a little bit more early. The change of character, the break of structure, this thing happens. We change the whole game from the bearish into the bullish after printing a higher low, and after seeing some kind of retracement at some kind of level. It doesn't matter if this is some kind of fair value gap, supply, demand, once again, Fibonacci's, once again, trend lines, it doesn't freaking matter. They're waiting for that breakout and waiting for some kind of retest. They're waiting for the retest until they're gonna, like, let's just say they're using Fibonacci's, right? I like using Fibonacci's. I like my specific Fibonacci zone, but this video not about Fibonacci zone. By identifying swing lows and swing highs, for example, they like golden zone or they like premium zone. So they're waiting for a retracement into the premium zone for them to be able to trade, or let's just say to enter a trade with more confidence. All right, stop loss, entry point, take profit target, doesn't matter, risk to reward ratio, what is this? But it's just this is just an illustration. So they're waiting for some kind of retracement, because it is like very high probability right now that we're gonna keep printing that bullish momentum, because we saw this thing happen. So they're waiting for the retracement based on their trading strategy, and this is like a third part of the traders that are waiting for that retracement inside the demand, inside the fair value gap. After breaking that trend line, it doesn't freaking matter. So there's like a 3 type of traders bouncing from the key level, and they're trading more aggressively because they understand their environment. They want to jump right away. They don't care. They're trading inside the range. For example, there is a range. All right, they're trading inside the range, bouncing back up, or just waiting for some kind of shake off, closing inside the range. Price closing inside the range, rally to the upside. then they're taking their profits. Other traders are waiting for the higher low to be printed, jumping into the trade. For example, they're right after seeing the change of character. Majority of people are jumping into those trades, but they're like way confident. Those traders that open a buy long position here at the bottom, because they're like right now they're chilling, you know, they're chilling, they just don't care. A lot of people are entering a trade on a higher price than they did, so they right now even more confident in sitting in this trade for a longer period of time. And the third trader type of traders, they're waiting for more confirmation. Higher low, change of character, the break a whole structure thing, higher low to be printed, we're inside this bullish momentum, they're entering a trade at around here. So this is the pattern that aligns, or let's just say it has a perfect connection with all of your favorites, or let's just say not favorite strategies, but all of the trading strategies are happening from my experience in here. So right now, what I want you to do is to go in your favorite ticker, let's just say the thing that you're trading, it doesn't matter, gold, crypto, forex, and to practice yourself, to practice until you're gonna identify clearly. Like, the best thing you can do is to identify lows and highs, lows, highs, lows, highs. And this is once again where the magic happens. So all I just wanted to show you how this type of pattern just illustrates and aligns with all of the trading strategies, Everything is perfectly aligned at the third, or let's just say somewhere in the middle and the third phase. Everything is perfectly aligned. Trading trend lines, support, resistance, doesn't freaking matter, fellas. So this is just an illustration. Of course, some of you right now have a question. For you, it's very easy to talk when you're not sitting on the real charts. But yeah, fellas, the back testing needs to start somewhere, you know, and education needs to start somewhere. So after seeing this type of pattern, like from the manual, you know, this is just like your manual, what type of market structure you need to start hunting for in order to open a trade with with the logic, because the logic is simple. Sellers, buyers, buyers here breaking even into a higher high, they push the price into a higher high, and they agree that they need to accumulate the price here at the bottom. Everyone agrees, big players agrees that those are the prices that they need to start accumulating big. So the supply, demand, the demand sits here at the bottom, So the supply and demand, that is why I said that there's like the best logic and the most logical trading strategy is this. The most logical trading strategy, because like what? We break into the higher high, higher low, just gonna identify that everybody just agrees to buy even more at this higher price. They agrees at this one, they agrees to this one, they're pushing the price to the upside. They need to see that price or that specific ticker with the price start flying, because there's like the buy power sits at the bottom. We beat the sellers in the most simple way. We beat the sellers, buyers won. That's it, end of the game. Rally to the upside until we're gonna face it, another supply. Another supply, maybe on a higher time frame, it doesn't matter at this point. But right now, let's just jump on the real charts and let's just see what is happening there, you know? Just prove me in the comment section that this shit doesn't work. Just tell me that this shit doesn't work. I'm gonna show you how everything is worked perfectly. All right, so we are on the gold's 1 hour time frame charts, because this is the most popular time frame. Everybody likes to trade on the 1 hour time frame because it fits perfectly every single person, for those who have time and for those who don't have time but they like to track the price action. So yeah, and let's just take a look at the charts. Right now I can see clearly with my naked eye one pretty cool setup that was at approximately here. All right, I'm looking, when I talked about candles in my intro, I'm always looking at those type of impulsive movements. After seeing this impulsive movement, I can start, because my trading strategy is based on the supply and demand. So let's just imagine that this accumulation was perfect together with this wick, with this support, resistance, supply and demand, doesn't matter. After seeing this impulsive movement, the whole break of structure thing, let's just say change of character after printing, or even here At some point, we retested this demand. We broke the whole structure from this bearish momentum into the bullish one, rally to the upside. Some of the people are jumping even on the lower time frames based on the supply and demand. We saw the retracement here after seeing this impulsive movement, rally to the upside until the whole structure was broken on the lower time frame, and we can jump scalping into those swing shorts. I mean, like short sell position, not a swing short, sorry. But the thing is that even here, by seeing this impulsive movement after seeing a respect from this demand, you can even jump in here as an example, right? This is your setup. After seeing this accumulation, for example, this wick alongside with this, this just identifies a perfect demand zone that in here we see multiple confirmations by getting respected here, because this was our support with some kind of shake off. We saw right now this impulsive movement. This is our demand. By using also even Fibonacci's to taking the whole chunk from this low to the high, premium zone got the respected. Oh my god, Jesus Christ, I love premium zones. So the premium zones, golden zone, it doesn't matter, it depends on your environment. Once again, some of the tickers, some of the asset class respects more fair value gaps. Some of the asset class are perfectly to trade based on the supply and demand. On some of the asset class or a specific time frame, it better to trade based on the Fibonacci golden zone if you need some more extra confirmations. Some of the Fibonacci's like zones, those premium zones, are respected on a different asset class. So it depends, everything is depend on your environment or your freaking environment. So yeah, let's just take a look what is going on more. Change of character, rally to the upside, of course, supply, demand. We broke the whole structure again. Of course, I cannot see the retest, but still, the price went all the way to the upside. If I'm zooming in, I can see on the lower time frame after identifying those lows, we broke the whole structure, change of character thing right here. We broke even more from this high into even a higher high. This is like an insane confirmation that we broke through the previous highs. So also those highs identifies by every single time we're breaking into the higher high. It doesn't matter if we're seeing a retracement or not. It just identifies us a bullish strong movement. And if you bought or if you jumped into a buy long position here from the bottom and you keep holding, for example, let's just do this, and you keep holding your buy long position, and after you're seeing this breakout through this high, you just keep riding this wave, of course securing your gains all the way to the upside. But still, you can ride by leaving your 10 or 5% of your leftovers of your position. You keep riding this bullish wave every single freaking time. Even in here, what consolidation, we broke the whole structure. Change of character happened here after this consolidation. Of course, I cannot say that this is some kind of change of character, but the thing is that we respected this demand. Not that perfect, but still, following this impulsive movement, demand was respected. Impulsive movement, rally to the upside. But let's just take a look at the Fibonacci levels are just got to respect from taking the whole chunk from those lows. Jesus Christ, what was respected the most? Freaking premium zone. So tell me that this shit doesn't work. Of course, not every single freaking time. This whole setup would be like from that manual that I show you, from that illustration. Markets and market sentiments sometimes could be a little bit shaky. Sometimes we're gonna see a turbulence in the market. You're gonna get stopped out, but of course, you're gonna, by using this type of formula, you could end up being like a really profitable trader. But don't think that every single time the trade has to be a win trade, the winning trade. I mean, some of the times you'll be also stopped out, which is normal. In trading, it is normal, and I don't want to talk with people who are thinking that they can win every single trade in trading. You'll be stopped out. Your job is to manage your portfolio. Your job is to manage your risk. Your job is to manage your bank account, the account that you're trading with, to end up in being profitable. So the thing is that every single time, look at the, after we seeing a rally to the upside, let's just take from the opposite way. A rally to the upside, who cares? It doesn't matter. But those impulsive candles on the 1 hour time frame, the market is getting overheated, right? We're getting very overheated. And after identifying that this is our, for example, this is our low, and seeing that stupid impulsive movement to the downside, even here, Or even here, if I'm not able to identify this one here, this one, what did that identifies us? That wait for some kind of retracement because there's a probability to see a sell short position, because we're gonna have a sell short setup because the market structure has been changed. As I mentioned on the Bitcoin market update, we changed the whole structure from the bullish into the bearish one. It's time for us to get down, or there is like a probability for us to get even lower or to see a lower price every single freaking time. Look, consolidation. After we identifying that this is our previous high, or can I say that this was our previous high, because on the 1 hour time frame my eye can see clearly that that was my previous high. After seeing those impulsive movements, at the end of the day, rally to the upside, rally to the upside. So how crazy is that? This is your job when you're jumping into the market. In conclusion, your job is to be perfect in identifying those highs and lows. Highs and lows. Once again, I'm gonna keep repeating you guys until you're gonna start throwing up. Highs and lows, 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 highs, highs, to be able to identify that change of character thing and see the rally to the upside. So this is my setup formula. I'm always looking for some kind of break of structure. The break of structure, not talking about those break of structures, those indicators, that this is just an example. This break of structure, the change of character is, for me, is the whole breaking the whole freaking structure. We're breaking the whole structure from the bullish into the bearish, or from the bearish into the bullish, and stop relying on the indicators. By using those type of supply demand, even the key level, let's just take a look quickly on the key levels by identify. All right, multiple respect here, we respected multiple times. We can navigate ourselves based on this key level. You, my friend, are the best indicator that could be out here. You don't need those indicators. Your job is to learn the market structure. So you are the best. Your eyes and your thoughts and your experience are the best indicator in the market. So comment down below what you think. Comment down below what is your trading strategy. Comment down below if you want to see more educational content. And once again, smash the like and subscribe button. It costs you absolutely nothing. And that is pretty much it. That was quick masterclass of the break of structure, change of character, and all the simple understanding market structure method. And yeah, that is pretty much it. I'm gonna see you in the next one. Peace out.